So, will the last rate hike of this year stabilize the economy for 2023, or should we prepare for more economic pain in the new year? Let's find out. And joining me from BNN Bloomberg is Kumutha Ramanathan. Thank you so much for being here. Let's talk about this rate hike first. It was more than economists had expected and also bigger than the markets had really baked in. How's the reaction so far?
Well, there's that initial sticker shock, right? 50 basis points takes the overnight rate to 4.25%, which is a level we have not seen since the 2008 financial crisis. But the overall takeaway is really in that nuanced conversation in the following press release on the back of those numbers. And so the real takeaway here is, yes, the rates are still very much in elevated territory, but in terms of future rate hikes, the door is open for potential moderation, and that is something the market is seeing as a dovish signal.
So has the central bank given us any type of clues on the state of the Canadian economy right now?
Well, that was the other important takeaway from this press release. They talked about how their efforts earlier this year, aggressive rate hikes, they received so much criticism from all political stripes about what it was doing for the average Canadian. Basically, they said on a 3-month rolling basis, they took an average and they see that demand is starting to ease. And that's an important, focal point for the market to understand that, yes, we had to be aggressive early on, but those results are really feeding into the Canadian economy much more faster than even the U.S., I would argue. It just had to use a little bit more blunt force in terms of bringing down decades high inflation. So in the Canadian economy, we are seeing signs of hope.
Hope that Canadians can take going into the holiday season. And what kind of hope, or what are you looking for tomorrow? Because we're expecting the Deputy Governor of the Bank of Canada to be giving a speech. What are you looking for in that speech? Is any kind of indication on what the road forward might be?
Well, we're going to be looking for that long-term view in terms of economic growth or lack thereof for Canada. Of course, in the last monetary policy report, which accompanied the last rate decision, they said that the Canadian economy was very much slowing down and will continue into the first half of next year. They echoed that same sentiment in this press release from today. Now, in terms of that long-term view, the Deputy Governor will give a road ahead, most likely. Will she hold to any firm figures? Likely not. But she will give us a sense and some clues as to the health and virility of the overall economy and what that means for the pace of hikes in the future. And that's really what we need to focus on.
How important is that message? And I want to talk to you about this because Canadians will be talking about this around the holiday tables. How important is that message tomorrow and how pointed it will be?
I guess it depends on how much she is willing to acquiesce in terms of where the Bank of Canada sees rates in the future and how much those demand pressures are starting to ease for everyday Canadians. Of course, we continue to hear that raging debate about mortgages and lines of credit and, a number of issues being impacted by this higher rate environment. They're getting that message, but they also need to make sure that they keep things in line and on track. And that is their job at the end of the day. So really, they are balancing, what is a difficult situation to be for the Canadian economy. But again, the efforts they have put in, as they said in today's release, are paying off.
Yeah, a lot of Canadians will be looking for that. Kumutha Ramanathan, thank you so much from BNN Bloomberg. Thanks for being here again. Appreciate this.
Thank you.